All right, here we go. Hey everybody, Smart Silver Stacker here. Welcome to today's live stream. We have got a fairly ominous development on silver's chart, and for a reason that one might not expect. We had the Federal Reserve announced another rate cut earlier today, and what's happened? Well, markets across the board, it seems, are selling off in a very big way. Stocks, gold, silver, Bitcoin's down almost 5% today, even more than silver. So what's going on? Well, we'll talk about why all these assets are down despite the fact that the Fed is cutting, and also why perhaps, yes, you need to be worried about the price of silver here, possibly, as we examine the chart, but might be some upside here as well. So let's get to it. First, let's just take a look at the chart. So the ominous part of this is that this uptrend, this upward sloping trend line, which has been in effect since February of this year, has been breached by today's sell-off. That part's not looking good. Now, as we zoom in here, you can see that there's also this support around 29.65 or so, which the silver price has tested twice since the beginning of November. Today we breached that. I suppose that there's another 10 minutes or so of trading. Maybe we'll close above that support. If we do, that will be a very positive sign, but it's not looking like that's going to happen, at least thus far. Now, Gamers Cube in the chat here says this is a great opportunity. Well, yeah, I mean, this is a buying opportunity, I would say, although we might want to just wait and see how this develops moving forward, because if this upward trend line is broken, it means that silver could have further to fall before it finds a bottom. Now, also, we talked recently about the possibility of a ABC correction from silver's high back in October of around 35 bucks. First, you get this A wave down, then a B wave rally, and then you'd get the C wave correction, the final part of the correction. That may be what we are witnessing here. If that is the case, it's probably got a little bit further to fall, and the rest of the chart kind of confirms that. So we'll see. Now, people are in the chat here say, how much was the cut? Well, the Fed cut 25 basis points. And again, why would the price of all these assets be selling off if there is more easy money from the Fed? Well, we'll talk about that in just a second. First of all, if you want to buy today's dip, if you see it as an opportunity, make sure you check out today's video sponsor, SD Bullion. They've got these pre-1933 St. Gaudens double eagle gold coins, slabbed and graded coins on sale for a very low premium over spot. And if you like stuff like that they're not making anymore, they've also got junk silver on sale. So both of these items I think are a steal at today's prices. Again, maybe waiting to see how this plays out with the silver price, but I think these are two of the best deals in bullion right now. Now let's talk about why assets are selling off even though the Fed is cutting rates. Well, it has to do with the message that the Fed included along with the rate cuts, Jerome Powell and the FOMC. And basically they're telling us that they remain data dependent and they're concerned about inflation. If inflation continues to rise, that might mean that the pace of rate cuts moving forward is going to be a little bit slower. That's what Powell tells us. Also told us, on the flip side, if we get a sudden weakening in the job market or in the economy, we may see an accelerated pace of rate cuts. But if you look at the CME FedWatch tool here, today the Federal Reserve cut rates to 425 to 450 basis points from what was the current level until today, 450 to 475. Now, this is the expectations of the markets for where rates will be at December of next year. And if you notice, the majority of those, it's not a poll, this is based on actual market data, but the majority of investors are looking at minimal rate cuts in 2025 now. 37.7% are betting on just one more quarter point rate cut between now and then, and 20.9% believe that there actually will be no rate cuts between now and 2025 December, so 1 year from now. And that is the change in market expectations that is being reflected in this market sell-off. Again, across assets, stocks are down today. Bitcoin is down today. Gold is down today. This is not isolated to silver. Now, some people, I think, have this theory that the markets are going to be crashed. There's going to be a rug pull by the central banks, by the Federal Reserve, as Trump is inaugurated. So around that time, we're going to see a crash. I've seen several people mention this in the comments. Some people have mentioned this on X as well. By the way, you can follow me on X at x.com/stacksmarter. If you'd like to participate in the conversation, I suggest you do so. I typically will respond if you send me a message or a comment on there. On these videos too, so don't forget to leave a comment down below. And while you're at it, smash that like button. Now, enough of this self-promotion. Let's talk about the markets. So the idea here being that, the Fed is concerned about inflation. Now, that's kind of an interesting stance to take, because if the Fed truly is concerned about inflation, then why did they cut at all today, right? I mean, that would be the question I would be asking, because if you look at the CPI year over year in September, 2.4%, in October, 2.6%, in November, the most recent data, 2.7%. Fed's target that they tell us they are committed to reaching is 2%. So if inflation is rising, why did they cut it all today? Well, they cut because they have to. And imagine what would happen to markets if they didn't cut. I mean, markets are crashing despite the fact that, the Fed did cut. That was priced in already. But what has changed here is the anticipation of more easy money from the Fed. Now, even if they do try to crash markets, let's say, pull the rug out before Trump is elected or as he's being elected, all that does is it sets us up for more easy money, massive amounts of easy money, because the stimulus can't stop. If there is a crash in markets, what will policy be? Is the federal government going to shrink in size at a time that we're seeing a massive economic contraction? Of course not. They will increase spending. They will stimulate. That is what Keynesian economists do, and it doesn't really matter which party you're talking about. They're all Keynesian economists who believe in the central bank's ability to stimulate the economy by flooding it with easy money. So if you do see a sharp drop in all assets, including silver, that will be a major buying opportunity. That could be akin to, who knows, like the pandemic crash in 2020 when silver was down around $12. Could happen again. I mean, this is a, clown world economy. Everything is being propped up by easy money. Look at what happens to markets just when they think that in the future there's going to be fewer cuts. It's not that the Fed didn't cut, the Fed delivered the cut, but now, based on what they said, people think there's going to be fewer cuts moving forward, and already assets are tanking. So anything is possible here. But the reason that the Fed ultimately will be forced to cut massively and stimulate, even more so if there's a stock market crash, is this. The U.S. national debt. Now we're almost a quarter of the way to $37 trillion, $36.242 trillion. Don't forget that last month's deficit was $367 billion. Cumulative deficit for fiscal year 2025, which we are 2 months into, $624 billion. This is why the Fed ultimately will likely be forced to intervene, not just with more cuts to the federal funds rate. The 10-year yield soared today. If you look at the 10-year yield, that is selling off tremendously. You're seeing the yield rise. So not only is the level of debt skyrocketing, but the cost to service it is rising today. Just look at the 10-year yield. I think it was up like 2%. It's a huge increase in the cost of financing U.S. debt, and yet the dollar strengthening today. So, it really is just clown world type economics. You've got inflation on the rise, massive deficit spending, and yet you see markets sell off as the Fed cuts. But ultimately, there will be massive stimulus. Forget what the CME FedWatch tool tells you. Forget what market participants believe. Right now, the severity of the debt crisis is not being priced in. It really isn't. Look at this. U.S. interest payments reach $1 trillion. This is from Visual Capitalist. This is from 2023. now the most recent data, interest, this is from the Federal Reserve itself, the Federal Reserve of St. Louis, quarter 3, 2024, interest cost on the U.S. debt, $1.16 trillion. It's higher than that now. And, all the forecasts, all of the predictions about how high the interest cost, they're always insufficient. They never get this right. And why do they do that? Well, because the statisticians who are forecasting this, the economic bureaus, they're all put in place by politicians. Politicians want a license to spend huge sums of money. It doesn't matter which party, they all just want to spend. And if we do get a massive market sell-off, forget about slashing the size of the federal government. It's not going to happen. Government spending will increase, and the Federal Reserve will be there with the printing press to bankroll them. Just like what happened during the COVID pandemic, just like what has happened through all economic crises that we have experienced over the past several decades, it will just mean massive money printing by the Federal Reserve. Now, back to the chart of silver here. How far could it drop before we see a bottom here? Well, again, it's hard to time markets. It's hard to forecast exact price levels. But what I can tell you is that thus far, this rally has gone by a fairly predictable, maybe not, in foresight, but in hindsight, it has advanced via a predictable pattern. Those, Elliott impulse wave. I'm not going to draw the charts again. You've seen it in several videos, but we've had an Elliott wave 5 move higher. Then we had an ABC correction. Then we had another Elliott wave move higher. And then now it looks like we're getting that ABC correction. So when that bottoms out, I suspect that, the silver price and asset prices in general will be moving higher. Now, when is that going to take place? I'm not sure. I mean, we might need some significant pain before that happens. Or, this could just be a bump in the road, because ultimately the inflation that we are experiencing is going to continue driving asset prices higher. And the Federal Reserve, regardless of what Powell says, if they don't ease in 2025, if they don't continue to cut rates, we're going to experience an economic crisis. We're going to see more bank failures. We're going to see a crisis in the commercial real estate sector. We're just going to see a sovereign debt crisis as the U.S. interest cost spirals out of control. It's already higher than what we're spending on defense. Soon, it will become the number one cost on the federal budget. It will exceed Social Security and Medicare. And at some point, unless the spending is really reined in, and I see no sign that that is in our future, then the Fed is ultimately going to have to buy up that debt to drive down interest rates and make the interest cost sustainable, or there will be a debt default. And that's the trajectory that we're on. So, today's dip in physical silver, let's say you do buy some physical silver, you buy some silver coins, some silver bars, and it drops a little further, drops a couple more bucks. As long as you're not going all in, who really cares? Dollar cost average, buy the dips. Somebody put on Twitter, and I talked about this drop. They said, oh, another buying opportunity, like LOL, because typically when silver drops, it's a volatile market. I will refer to it as a buying opportunity because that's how I personally view it. It's not financial advice. But, I've been buying the dips since silver was in the mid-teens. And I've been buying the dips all the way up from down here in February when we were around 22 bucks. So, do I mind that silver's corrected today? I know a lot of people were upset when silver was breaking out to almost 35 bucks, saying like, man, I wish I had bought more. Well, if those same people today are saying, see, silver always drops, you're going to miss out. So I think it's very important, given the level of debt and deficit spending, the near inevitability of massive Fed stimulus moving forward. I just think that, you'd be remiss to not have some commodities and some physical, tangible assets in your possession. But let me know what you think in the comments down below. If you want to see more videos like this one, make sure you check out the one that's popping up on your screen right now. Thanks for watching, everybody.